U.S. earnings season is underway today, but even though results have been positive, we're not seeing follow-through in the stock market. This suggests that positive results may have already been priced into the markets and expectations may be extremely high, suggesting that we could see a round of profit-taking against news and potentially a sell-off against disappointment. The U.S. Market had a huge rally following the election at the end of last year. We saw the Dow run from near 17,500 to just below 20,000. A week ago, it got to within 1 point of 20,000. It's still been unable to get through. The longer it takes, the less likely we're going to see it happen. And even if it does trip up to a very small 20,000 print, it seems less likely we're going to get much farther because there doesn't seem to be any oomph behind it. Right now, we're trading on the US 30 in a 19,700 to 20,000 range for the Dow. This is pretty steady, but we are seeing signs that this might be topping. RSI is showing upward momentum slowing. So we've got huge expectations now have been built heading into earnings season. And in particular, the financial sector was most important because this was one of the sectors that led the way. There was a big reflation trade, a big idea that rising interest rates would help banks. And so the expectations for banks have been particularly high. The results we've got today have been reasonably decent. Most of the main banks that reported beat the street. So that was Bank of America, JP Morgan, and BlackRock, the hedge fund company. BlackRock reported huge inflows. That's not a surprise. We were seeing close to record equity inflows into equity funds in November and December. The interesting thing, some other positive notes, BlackRock raised its dividend, and by offsetting that, we did have an earnings disappointment at Wells Fargo, and we had a sales disappointment at Bank of America. So a little bit of mix to the results, but overall not bad. But let's take a look here at BlackRock first. Huge results, huge inflows, dividend increase, all the right mix to send the stocks through the roof. And what happened? Well, it's gone up, but it's still well short of where it peaked a few weeks ago. What does this tell us? This tells us that this was already baked in, that the numbers were already baked into the stock price. And it's a theme that we could see play out as we move into earnings season and we get results from other sectors, is how much has already been baked into stock prices, so there's not much room to run. And in fact, you could see the other way, where we could see profit taking against the news. We look here at Bank of America. I'm actually going to blow this one up to a larger chart. Look at this. So we've had this huge run. It's been going sideways for the better part of a month. Tried to break out to a new high, failing. And let's look down here at the RSI. Very overbought, has rolled under 70, signaling that the uptrend was ending, and in this case, sideways to downward momentum starting to build. We're into a consolidation phase, but more importantly here, this is starting to look like a double top. We could see a bit of a pullback here in Bank of America. If this 22 level fails here, it could be in big trouble. This resistance here is about 2350. Just to highlight a couple of other things here, JP Morgan Chase of the big results has tried to peak up to a new high. This could end up being a shooting star or a bull trap or some other kind of bearish reversal, so watch out here. Once again, we've seen it get extremely overbought. Upward momentum has been slowing. Negative RSI divergence, and now going back into consolidation correction area as this thing flattens out. So again, another one that is looking exhausted. Good news, and we weren't able to get much follow through off of an initial pop. That's telling us that we could see some profit taking against positive news, and if we do see any kind of negative news, weak guidance, anything like that, stocks could be punished. Don't forget, a week ago, Macy's took a 14% hit on a profit warning. So there is a potential for things to be vulnerable here. Markets are looking like they've had a really good rally here, but they're now looking exhausted. And the reaction to earnings season is showing that the upside may be limited, even if we do see positive results. The last thing I'll note here is that we're still continuing to struggle with 20,000 on the Dow. We can see there was an the initial reaction over these hours when the results came out was pretty limited. We did get a pop at 9:30 when the exchanges opened. That's already been given back as well. So that suggests here pretty limited reaction, and in fact, good news seems to be running into a wall of profit taking, which is something that's important for traders to remember as we move into earnings season.